half of 2023 is almost on the books. Of course, we've got a lot of data coming in the next few weeks that'll really help us to see the future as best as can be expected. However, I love to play the game, the what if game. So here is my analysis for the rest of 2023 before we get that data. And then we can all laugh when I miss. This is Randy Kirk. If you like seeing me put up my predictions, then hit the like button and that'll tell me that I should do more of it. And then if you would like to maybe subscribe, I don't know why you haven't done it yet. Have you bought any books yet? Look, the Elon Musk mission, that'd be a good one to buy. Anyway, and then once you hit subscribe, you can hit notify because later this week, I'll be putting up my 2024 predictions. And now people are asking, since I've done 2026, they want to see 2025 and 2027 and 2028. If you want to be notified when those happen, I'm not 100% sure I'll do 27, 28, et cetera. I will do 2025. All right. So, and then of course, Patreon, thank you so much. I'm going to start listing those individuals that are currently my Patreon subscribers and also the new ones that come on board. So that's going to be something new I'm going to add to how I do the channel. If you're interested, there's a 7-day period right now for free. You join up and give it a test. Just go down into the information below and click the link. All right, let's go ahead and I'm going to share the screen. Okay, we're going to start with, let's be honest right now, this year, for the foreseeable future, but probably not that big of a foreseeable future, the real money is going to be in the cars. So I'm not going to go through the details on energy or the details on charging stations or whatever else. These are still small items by comparison. I will include, as you'll see above, I will include some of this information, but I'm not going to go through the details of how I got there. But we will go through the details on the car. So here's how I see it. In the first quarter, Fremont sold 138,000. I'm going to say they're not going to increase that very much in the second quarter. I'm going to say they're going to increase it a lot more in the third quarter as business starts picking up. Because right now they're not selling many X's and Y's. They're not selling many S's and X's in the United States. They're starting to open up new locations around the world where they're selling them. But I suspect that S and X category it's a little soft right now. So that's part of why I'm thinking it'll only be 140,000 out of Fremont. But I think it'll go to 150 and probably still be 150 in the fourth quarter. Then we go to Shanghai. Well, Shanghai has been doing 77,000 per month. You multiply that times 3, and you're above this 218 from January. I'm from the first quarter, I mean. So 77,000 comes out to around 230,000. So let's figure there might be a little shortage in June because of the switch over on the Model 3. So let's just go with 230. That might be a tad high because of the Model 3 changeover, but we'll have a little bit of room to play. I think that'll go back to 250 as the Model 3 comes on stream, and then stay at 250 by the end of the year, giving us a 1 million run rate for Shanghai. I've always believed and think that the real potential run rate's around 1.1 million, even as high as 1.2 million. But for now, at least for this year, you may have seen my video earlier where I talked about the idea that maybe Tesla's got their foot on the brake just a little bit right now with regard to production. So those are my numbers for Shanghai. Where that foot on the brake is really showing up is in Austin. They did $43,000 in the first quarter. I'm saying 43,000 cars. They did 43,000 cars in the first quarter. I'm saying that's only going to go to 45,000 in the second quarter. I know that seems crazy, but I just don't see, looking at Troy Tesla's numbers and whatnot, I think maybe it's going to be one of those quarters. Maybe they're just not doing all they can do to really move cars out the door. Now, I think that's going to jump up to 80 in the third quarter because I think they're going to have figured it out. They're going to know just what they want to export, just what they can do in the U.S. We'll start to see some pickup on the numbers across the country, not just in California. And then that'll pick up to 114, giving them a run rate at the end of the year of very, very close to 500,000, which is what I always thought they would do, is 500,000 run rate by the end of the year. And then that should continue into 2024. The run rate should go even higher. Then Berlin, similar circumstance. We got 44,000 in the first quarter, 55,000, I'm saying, for the second quarter. Again, Doesn't seem like they're pushing it. They just talked about not doing Saturdays. But I think, again, a lot of things are going to work their way out by the third quarter. I think that goes to 95,000 in the third quarter and 125,000 for a full 500,000 run rate out of Berlin by the end of the year. Okay, altogether, that gives us a total of 2.127. I think that and I think that's, realistic. Okay, so yeah, not 2 million, not 2.2. 2.2 has been my number, not 2 million, which is Elon's that's the stretch number. No, I think it's going to go over that. This is my projection. So one of the reasons I love cars and one of the reasons I'm involved with Tesla is because I love the art form, okay? I am an art lover. I've been in every art museum in Los Angeles and in most of the great art museums around the world. I even have some museum framed limited edition signed prints on my walls, okay? But it never occurred to me that I might be able to invest in the major leagues. That is, until now. I have a new sponsor, and the sponsor is called Masterworks, and they're in the business of helping regular investors like you and me be part owners of pieces of the likes of Picasso and Banksy. Okay, these paintings are qualified with the SEC, and then they break them into shares and they offer them to investors like you. It's crazy. Well, when one of these pieces resells, you get a slice of the potential profits. In the past, Masterwork exits have delivered 13, 35, and 10% net returns. And they've had 9 exits in 2022 alone and 13 total since they started. Even for Tesla stock owners, diversification is key. And alternatives specifically have been seeing, what they call alternatives, have been seeing huge growth. Goldman Sachs and BlackRock say that the days of TINA, there is no alternative, are over. RIA reports 88% of surveyed advisors intend to increase allocations to alternatives over the next 2 years, with over half, 52.6, raising allocations all the way to 15%. Institutions are already maxed out at 30 to 50% into alts. One alternative has seen amazing numbers, even in 2022, fine art. The first 5 months of 2022, the average piece sold for 26% more at auction. 22 was the best auction year ever, with the highest total from big 3 auction houses. Nearly 18 billion went through those auction houses. Last time inflation was this high, in 1977 to 82, the Art 100 index appreciated 130% versus 80% inflation. Contemporary art average annual appreciation is 13.8%, and that's from the MW index. Masterworks has over 740,000 members, and their paintings commonly have sold out in minutes. But you can get priority access by going to masterworks.art/Randy Kirk. So that's, we did the 423,000 auto units in the first quarter. The ASC was, the average selling cost was about 45,000. I'm saying that we go to 460 and the average selling cost goes to 46,000 instead of 45,000 because more Model Ys. That's the main reason. That's the main reason. More Model Ys, a lot more Model Ys by comparison to the other cars. A few less Model S's and X's, which will keep it under, keeping it down, not allowing it to go. As you can see, the rest of the year, I'm seeing it might go to 47, 48. Third quarter, I'm saying the total car production goes to 575,000, and then fourth quarter, 660,000. That doesn't include any Cybertrucks. Probably looking at 2,000 to 5,000 Cybertrucks this year. I have not included that at all. So total auto revenue goes from 19,000 in the first quarter to 21.2 in the second quarter. That gets us to 20, and then 27,000, jumps up a lot in the third quarter, and then finally 31.7 in the fourth quarter. You can see that that means it's about 100 million in total auto revenue for the year. Margins, we know they were 19%. That's a little bit of a round up. I think that's going to jump pretty good in the second quarter. There's a few reasons for that. One would be the Inflation Reduction Act. because it looks like they're going to be building I think they're going to be building almost all of these incentives into the cost of goods. So that'll be one thing that increases the margins. Number two will be that they're going to be selling more Model Ys that have better margins. Number three will be that Fremont and Austin will have been running longer, and so they would have gotten costs out of those factories. And so you'll start to see some savings there in terms of just, getting better and better at making the cars in those two brand new factories. And then commodity prices coming down, battery prices coming down, all of those things together. I'm only going to give it 0.2%. So from 19.19 to 0.21, I think the quarter three, you'll continue. Everything I just said just gets better. In quarter four, everything I just said keeps getting better. So we go to 22% margins and then 23% margins in the fourth quarter. So there, and then it averages out about 21 for the year. Then total auto gross profit that we had in the first quarter was 4.2. This is just it's just math. It's a formula, as you can see right here. It's just a formula. So 4.4 in the second quarter, 5.9 in the third, 7.3 in the fourth. That would give you $21.9 billion in profit for the year in just the automotive division, based on 100 million in sales. That's the gross profit. Then we have the energy profit. I'm putting that at 0.2. I'm sorry, company reported 0.2 in the first quarter. I think that Lathrop will have ramped a lot more, and they'll start to see more of the bookkeeping numbers starting to come in. So I'm putting that at 0.4 in the second quarter. A third quarter, I believe they will be ramping even more as they start to bring in this new equipment. And then by the end of the year, they should be very close to getting the 2 billion in profit per quarter that Lathrop is supposed to produce. So I'm putting that only at 1.5 by the fourth quarter. Other profit from all other sources, and there's a very long list of sources, is 0.1 in the first quarter, 0.2 in the second, 0.3, 0.4. So, that's insurance. And I mean, just go down the line. There's a whole bunch of stuff that includes. So I do have an IRA line. So this would be on top of what ends up in cost of goods sold. So I'm saying that they may not show it as a line. Okay. Remember, this may not show up as a separate line in the second quarter, but I'm saying there will be another $0.4 billion in profit, $400 million in profit in the second quarter. And then that will continue for the rest of the year. And it'll be in items that aren't necessarily in cost of goods, easily shown in cost of goods sold. Because it's a total profit of 4.5 billion is what they were showing in the first quarter. Before overhead, 5.4, 7.6, and 9.6. You can easily see those. The overhead was 1.8. I'm saying that stays the same in the second quarter because they're not showing much of an increase in sales. But then that'll start to go up as the sales increase out of the two new factories, and as they start to turn the ground in the various new factory extensions and or new factories in Mexico, Reno, and Shanghai. So up to 2 billion and then 2.2 billion. And then the GAAP net was 2.5 in the first. I'm showing 3.6 now for this quarter, 5.6 for the third quarter, 7.4 for a total of 19.2. And that would give you earnings per share of, we already know, was 0.86, and it's going up, as you can see, $1.06, then $1.64, and then 2.14 for a total of 5.69. So you multiply that times what? What number do you want to multiply it times? Do you want to multiply it times 50 as a PE? Well, 50 times the PE there would give us about $280 a share. We want to multiply times 60. Well, then you would get it over 300 already. And that is for 2023, not even projecting into 2024, which we'll do in a separate video. All right, so let's drop down and let's look at a bear case. So in the bear case, we know what the first quarter already looked like. So the second quarter, I've got numbers that are even less. And the third quarter, not as many for a total of under 2 million total units. Okay. So then let's pop up on the bear case to spreading the total profits. And you can see that in this particular case, I only get to 93 million in revenue from cars. instead of almost 93 billion instead of almost 100 billion. The margins are still averaging 21. I didn't change the margin line except in the second quarter. I changed it down just 0.1, 0.01 rather. So, that's being a little bearish. So auto gross profits total of 19.9. Then the energy profit, I dropped that down just a little bit. Other profit, I think I kept that the same or down just a tad, for a total profit in this particular layout of EPS, the total 14.69 with the EPS of only 4.39. If you give that a 50 multiple, you are still at 210, 220, somewhere in that range. If you give it a 60, you're looking at 240, 250 for this year. So where am I wrong? Is my bear case more realistic? Do you think it will really only be 2 million cars? Do you think my margins are right? Show me, if you're going to say that the margins are wrong, tell me why. Tell me what you think I've got wrong on the margins. We're not seeing any additional price cutting except in individual cases for a couple of weeks here and there in order to move specific cars off the lot. And we're seeing price increases. That would be another reason why the margins would be going up. Have I got the number of cars wrong? Show me, where am I still too high at almost 2 million cars? Is that still ridiculous? Let me know which quarter, by how much, what would you like to see instead? I'd really love to hear your comments on this. So there you go. That's the deal. So if you liked what you saw here, then hit the like button. If you hate it, no, don't ever push not like, okay? And then hit subscribe, hit notify if you'd like to see the 2024, which is coming up later this week. And then also, of course, you could join Patreon. And that would be a great help, as well as you get these. These are all posted on Patreon, so you can go up and spend more time with them, even copy them, etc., if you'd like to. All right, that's it.
Click the link below to get your paperback, Kindle, or audiobook now.